Good morning and welcome to November's Business Outlook Call. I'm Marilyn Witt, Manager of Media Relations, and with me today is Mike Trubbing, our bank's Senior Economic Analyst. We're going to take questions from reporters who are on the call today, but first Mike is going to give us a brief summary of today's report.
Thank you, Marilyn. Responses to our monthly manufacturing survey suggest that regional manufacturing activity is continuing to grow in November, but at a weak pace. Diffusion indexes for general activity, new orders and shipments were all positive for the second consecutive month, but decreased somewhat from the readings in October. The employment indexes showed improvement, however, reflecting a slight increase in hiring and a lower percentage of firms cutting back. On balance, the survey's rising input prices, but the prices of reporting firms' own manufactured goods were near steady. The broadest indicator of future activity showed marked improvement this month, and future indicators for shipments and new orders rose as well. And most notably, the index for future employment increased. And our special questions this month addressed firms' rate of capacity utilization and capital spending plans for next year. The average rate of capacity utilization increased over the past year in parallel with similar rises nationally, and firms' capital spending plans for next year were somewhat less optimistic than they were when we asked the questions last year at the same time.
Thank you, Mike. We're going to take a question. I think Dow Jones is on the line. Kathleen Madigan, Dow Jones, do you have a question for us?
Yes, I have a couple. The first is, did anyone indicate that the snowstorm in late October had any impact on their business activity?
No, we didn't receive any comments to that effect, and we didn't ask any special questions on that this time.
Okay.
We did ask that for the previous storm that occurred, but we did not focus our attention on that this time.
Okay.
Mm-hmm.
I think we had another reporter join us. You're on the...
Yeah, sorry, it's Ellen Freilich.
Hi, Ellen. How are you? Ellen Freilich, do you have a question for Mike Trubbing?
Sure. Mike, there seems to be, it's sort of a little bit of a split personality on this with the work week and the employment up, but the shipments and new orders down.
Right.
Does that signal anything?
No, I think, right, the indexes moved in opposite directions. Both the employment indexes, as our measure of labor market conditions, both number of employees and their average work week improved this month. Most of the rise in the employment index came from fewer firms reporting declines in employment. So, of course, the diffusion index is a combination of increases and decreases. Nevertheless, we did see just a slight uptick in the share of firms reporting increased employment. But it is consistent with the 6-month forecast, which showed pretty notable improvement in the 6-month expectation for employment in these firms. For example, the share of firms expecting a rise in employment increased from 25% to 37%, and that's notable and was consistent with the other broad indicators for future growth, where we saw more firms expecting growth in shipments and orders and overall activity over the next 6 months. And I think on the current side, the overall indexes are still positive, so that's a big improvement over what we saw in those 2 summer months, where we saw negative readings on almost all of our indicators.
Kathleen Madigan?
Thank you.
Mm-hmm. Do you have a follow-up for us?
I want to pick up on the capital spending special questions tied with the employment expectations. It does seem that going into 2012 that companies may be actually emphasizing hiring people rather than investing in capital, which does seem to be a shift from what companies have been doing nationwide since the recovery began.
Right. What we found in the special question, where we've been asking the same question November, I believe, for the last 3 years, we asked for their rate of capacity utilization compared to last year. And on average, we saw the numbers increase like the national numbers. And then when we asked them about capital spending, we had slightly smaller share of firms expecting increases compared to when we asked it last year. 35% compared to 38% last November. So on balance, the capital spending balance is a little less optimistic than we saw last November. But we did, evaluate also the relationship between their responses to that question and their capacity utilization rate. And those firms that had higher capacity utilization rates were more likely to increase their capital spending, which is not too much of a surprise. But you're right. We're seeing improvement on the labor front, at least in terms of expectations. Yet to really show up in bold numbers on the current side, but this is what the firms are telling us right now.
Ellen Freilich, Reuters. Any additional questions?
No additional questions. Thank you.
Mm-hmm.
Kathleen?
No, none for me, thanks.
Okay. Well, thank you. Thank you both for joining us, and thank you all for joining us for November's Business Outlook Survey. We're glad you were able to join us. Please join me, Marilyn Wimp, and Mike Tribby for December's Business Outlook Survey. We'll be bringing it to you at 10 a.m. December 15th. See you then.
Thank you. Happy Thanksgiving.
Oh, you too.
Thank you.